How's it going, everyone? Welcome back to the Crunching Numbers YouTube channel. Today we'll be taking a look at contingencies within accounting. Within this video, I'll be providing a quick overlook on what contingencies actually are, the different types of contingencies, how management estimates these contingencies, and providing a couple of examples going over this. So whether you're studying for the FAR CPA exam or you're in an intermediate accounting class, this is definitely the video for you. Before we jump into the video, if you just want to see the examples that I go over, I'll leave timestamps below for you to check out. That being said, let's get right into it. So, what exactly are contingencies? Well, contingencies are situations or existing conditions affecting a company that could either lead to a possible gain or possible loss if a predetermined event occurs or fails to occur. So there's two types of contingencies, a loss contingency or a gain contingency. The first one, loss contingency, it's in the name. As a result of a future event, a loss will result. So with loss contingencies, they're allowed to record accruals and or disclosures based on management's measurement of the event occurring, which we'll actually take a look on management's measurement and what that's all about on the next slide. The other contingency is a gain contingency. As a result of a future event, a gain will result. However, with gain contingencies, no accruals are allowed. You're only allowed to provide disclosures, again, based on management's measurement of event occurring. So let's take a look at these management measurements. So there's three significant types of measurements of contingencies within accounting. You can either have probable, reasonably possible, or remote. So starting off with the first one, probable here, if contingency is probable and the amount can be estimated, well, for a loss contingency, you would provide an accrual and a disclosure. However, for a gain contingency, you would provide a disclosure only. Remember, for these, if the amount of contingency is within a range, you can accrue for the best estimate within that range if, say, in the problem, it gives you a best estimate. However, if they don't provide a best estimate and they just give you the range, then you can accrue and or disclose for the minimum amount within that range. Moving on, if the contingency is found to be reasonably possible, then again, for a loss contingency, you would provide a disclosure only, as well as a gain contingency, you would provide a disclosure only. Remember, for these, you may provide the amount of a range of contingency within the disclosure. Moving on, for remote contingencies, if a contingency is found to be remote, whether it's a loss contingency or a gain contingency, you would provide neither. You would not provide an accrual nor a disclosure. And for remote contingencies, remember, they will only require disclosure if it involves debts of others guaranteed. If it doesn't involve this, then again, you would provide no accrual and no disclosure. So jumping into this first example here, remember, for all these examples, all we're going to do is determine how the contingencies below should be accounted for. So number one, piano company has a pending court case against guitar company and could potentially result in damages anywhere from $150,000 to $250,000. Piano company's management believes these damages are probable and estimates that $175,000 will be paid as a result. So in this case, we're dealing with a loss contingency because piano company could potentially be liable for damages. In this case, piano company's management also believes these damages are probable. So that's management's measurement of the contingency, and estimates that $175,000 will be paid as a result. Therefore, that's management's best guess. So on the previous slide, as we know that any loss contingencies that are found to be probable, we're going to have to provide an accrual, so A for accrual, plus a disclosure. And in this case, we'll provide an accrual plus a disclosure of management's best estimate, which we found out to be $175,000. So moving on, number two, nail company's warehouse had a water pipe burst resulting in flooding and damage to nearby businesses. Due to the complex nature of the county's code, nail company believes it is reasonably possible that they will be found liable for the damages. These damages are in the range of $50,000 to $75,000, with no amount within that range being a best estimate. So again, in this case, we're taking a look at a loss contingency since nail company is being found liable for damages of the flooding. Again, it says nail company believes it is reasonably possible, so that's management's probability of the loss contingency occurring. And then in this case, it gives us a range of $50,000 to $75,000. And in this case, it says no amount within the range being a best estimate. So again, on the previous slide, we know that a loss contingency that is reasonably possible and is given a range with no estimate within that range being the best estimate, we provide a disclosure only for the minimum amount within that range, which in this case is $50,000. And just to take a look here, I provided an example 1 solution slide. So just to recap, the first one providing an accrual and disclosure for $175,000, and number 2 just providing a disclosure only for $50,000. So taking a look at example number 2 here, again for these as well, we're just going to determine how the contingencies below should be accounted for. Starting off with number 1, Couch Company has a pending litigation case in which they are entitled to receive up to $2 million. Couch Company's management team believes a verdict in their favor is probable, and that the amount of $2 million is the best estimate as a result. So in this case, we're taking a look at a gain contingency because it says Couch Company is entitled to receive $2 million. It also says Couch management team believes a verdict in their favor is probable, so that's management's probability of the gain contingency occurring, and that the amount of $2 million is the best estimate. Again, from the previous slide, we know that a gain contingency that is probable, we're going to provide a disclosure only, and we can provide this disclosure in the amount of $2 million, which again is just management's best estimate of the gain contingency itself. So looking at number 2 here, Shoe Company's warehouse broke out into a fire due to an employee's negligence. This fire spread to nearby businesses, resulting in mass amounts of damages. Shoe Company's defense team believes this probability of Shoe Company being found liable is remote due to the employee's negligence. So taking a look at this problem, we're dealing with a loss contingency since Shoe Company's warehouse broke into a fire that led to mass amounts of damages. That would be a loss. However, it says management's probability of this loss is remote, and it doesn't even provide management's best estimate or a range. However, we know that a loss contingency or gain contingency for that matter that is remote, you would not provide no disclosure nor an accrual. So I'm just going to write none here. And again, I provided this example 2 solution slide just to recap. Number 1, disclosure of $2 million. And again, for number 2, we're not providing an accrual nor disclosure, so none. And that pretty much wraps up our video surrounding the contingencies within accounting. Remember, as long as you're able to distinguish what type of contingency is being provided in the problem, as well as the rules surrounding management's probability of the contingency occurring, then you should be able to solve for a majority of your homework assignment questions as well as your exam questions. So that being said, I'll leave you with a question of the video. So in example 1, problem 2, if the probability was remote, how would Nail Company report this contingency? Make sure to leave your comment in the description below answering this question. The first one I see correct, I'll pin at the top of the comment section. Also leave in the comment section below what topics you would like me to cover next or different topics you would like to see in the future. But that being said, I hope that you enjoyed this video, and I hope everyone has a good one.